Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we share with you all the latest updates about the stock markets, how they are panning out in trade as we speak halfway through the market hours, and also what should be your strategy going forward from here too. But a first quick check on how the markets are panning out. It's been a fantastic day so far after a dismal first week of 2023. The markets have in fact, and the bulls have staged come back onto the street. 1.3% uptick for the benchmark indices. You can see comfortably 226 points up for the Nifty, 18,085, and the Sensex is hovering near 60,715 odd levels. That's an 810 point of a jump that you're seeing. We almost saw that 1,000 point jump in the first half of trading session, of course, led by all the support that we saw from the global markets overnight on Friday, and then in the early morning hours of the Asian markets as well, all of them lending out support right there. Of course, a whole host of factors, the US jobs data, the economic outlook, the global markets, as well as the zero COVID policy from China ending right there, with Chinese government really opening up the borders for international travelers. All of those factors really supporting the market indices. Let's look at how the broader markets are doing at this point in time as well. In terms of the mid cap and the small cap 100 indices, again a sharp jump, 0.7% uptick for that one. The India VIX is comfortably at around 14.7, down by 1.6%. In terms of the other sectors of the Nifty, all the sectors are up in the green, led by the gains that are coming in from the IT pack. Look at the sharp move right there, 2.4%. That's the index that's leading from the front. And of course, the earnings season that kickstarts today, with TCS reporting its numbers later in the evening, and then followed up by Infosys, HCL Tech and Wipro this week entirely. So some momentum coming in from the IT pack. Metals also shining bright in trade today. The bank supporting with over 1% gains too. Royalty space, autos, FMCG, all of them perhaps gaining in today's trading session as well. In terms of the market breadth, clearly in favor of the bulls, 44 advances to 6 declines today. Which are the stocks that are moving the most as far as the Nifty gainers are concerned? Well, it's M&M, IndusInd Bank, TCS, Tech Mahindra and HCL Technologies, all of them up by over 2% odd. What's still sulking in this overall, buoyant move that you're seeing in the markets today? It's Titan, HDFC Life, Bajaj Auto, Britannia and Bajaj Finserv that continues to drag for the third consecutive session as well. So those are the slight losses that you're seeing, but overall the markets are in a happy mood. And what could also provide in some more cheer to the markets is the way the mutual fund industry is likely to grow over the course of this entire year. So in case you've been looking at markets from a mutual fund perspective, you have been investing in mutual funds, how is this year likely to pan out for you and what should be your strategy? That's going to be the focus of this special edition today. And joining us is somebody even more special. Radhika Gupta joins in, MD and CEO Edelweiss AMC. Welcome Radhika and Happy New Year to you, and hopefully this year turns out to be an even better year than 2022, a very healthy one, a very prosperous one for you, for your team and for your family members as well. To that edition that you've got in 2022, we really hope and send in all the blessings right there. First up, help me understand, how do you really sum up the year 2022 gone by, especially when we talk about the mutual fund investors?
So I think Happy New Year to you and your team. Delight to be here. I think if I had to sum up 2022, firstly, from a capital markets point of view, I think it was, a year that taught a lot of lessons. Many investors have come into the market and into the mutual fund industry, particularly after 2020-21, where you saw a straight runaway rally, hardly any volatility. And 2022, even though the benchmark indices, as I said, were up 4%, that 4% masks a lot of drama that happened in the year.
Yes.
Whether it was geopolitical, whether it was inflation, whether it was China, whether it was tech stocks. I mean, there was a lot of drama through the year. So I think it was a year that taught a lot of lessons. And I think we're going to go into 2023, which is not going to be a straightforward year, hopefully having learned some lessons, especially new investors. I think for mutual fund investors, the sort of most heightening thing of 2022 and over the last few years is the fact that the retail investor is getting stronger and stronger. That he or she now contributes 13,000 crores a month of retail savings via SIPs. And we've seen, markets go up, markets go down, but those SIPs don't stop. So I think that's a very heartening trend. It's the coming of age of the retail investor, and I hope that trend continues. So volatility doesn't stop. The spirit of investing continues.
Okay, noted that. Well, definitely we did see the domestic investors, including the retail investors, doing much of the heavy lifting in 2022. Hopefully that, is the case in 2023 as well. But let's break it into two parts, both for equity markets and for the debt markets. What is the kind of outlook that you have for this entire year?
So I think as far as, let me start with debt markets, I think, you are coming towards the end of perhaps interest rates rising, I mean, 50, 100 basis points, 50 basis points extra may happen, may not, but you're coming close to the peak. I think interest rates are at elevated levels, and it is a good opportunity for investors to lock in yields. So that is what we're excited about. I think one category of debt funds that really has seen its sort of mojo is target maturity debt funds, which are, started with Bharat Bond, but they've essentially allowed investors to lock in yields at very tax efficient rates. Yields above 7.5% now, if you're locking in for 5 years plus. So I think that continues to be the opportunity for fixed income investors. And in light of volatile equity markets, I think fixed income poses a very important alternative. As far as equity markets, it's hard to give a 1 year outlook. And,
Yeah,
it would be unfair to say that the 1 year is going to be an easy one. We do think global volatility, inflation in global markets, recessionary concerns
yeah.
will India not immune from volatility, but we're still very constructive on the domestic economy from a 2 to 3 year period.
Absolutely. In fact, I was coming to that. How would you really see Indian financial markets placed in the global context as we begin this 2023? And what could be the impact, if at all the recession were to hit, on individual portfolios? And how should one be prepared for it to be able to, safeguard one's capital right there?
So I think there are two parts. There's markets, and markets are never immune to global volatility. But if you look at economy, I think over a 2 to 3 year point of view, India is relatively well placed. And there are a couple of factors. I think one is private capex is genuinely coming back. You are seeing an uptick in consumption. And in global markets, like in the US, inflation is probably at historical highs. They haven't seen these levels since the 70s. India has sort of been able to handle this a lot better. In fact, I think some of those inflationary concerns in the Indian context are also coming down. So I think from a portfolio point of view, the way we see it is, domestically inclined companies. So whether it's your beneficiaries of PLI, whether it is manufacturing, whether it is defense, all your domestic companies that are benefiting from private capex, they are likely to do well. Your more export oriented companies, so that is your IT services and others, might be laggards because they are more hit by recessionary factors in the US and Europe.
Okay, so how would you really advise a small retail investor approach 2023 from an overarching perspective? And then we'll delve a little deeper into the details too.
Yes, I think for retail investors, things like market timing, sector timing, etc., this is hard stuff to do. I think investment decisions should be automated. For many investors, I think the mutual fund industry has created fantastic tools. So one of my personal favorites, for instance, is this category called the Balanced Advantage Fund. It has a mix of equity and debt. It helps you do your asset allocation, gives you enough upside, but cushioning on the downside. For equity investors, again, I think SIP proves to be a fantastic tool in volatile years because you can really accumulate more units when markets falls. So I think the idea is to keep your solution simple, to have asset allocation in place,
Yeah.
whether it's by the way of funds, and to use tools like SIP and keep moving on.
Absolutely. And I was coming to the asset allocation part too. What is the best way in which one should really look at rebalancing portfolios? Say, for example, over the last 3 years, when these gush of new investors, first time investors entered the markets, they had all sorts of exposure to markets. They had their direct equities, they had mutual funds, whatever came their way, they did that. But in terms of rebalancing, how would you really advise if one is looking at as a fresh to their portfolio, in 2023? What should be the right approach?
So I think asset allocation is largely static. The rebalancing is less important, and this is a popular point of view. I think you as an investor have to figure out a portfolio that works for you. And a down market is actually the one to understand your risk appetite. Your personal asset allocation should be one that if the market falls 20%, it doesn't cause you anxiety. Of course, a good asset allocation will have some component of fixed income. It will have large and mid cap, And if you are evolved enough, it will have some component of gold/silver and some component of international equities. I think the mix is very, very individual dependent. And don't try and time asset classes. So don't say this is a good year for gold, this is a bad year for
Yeah.
international. Asset allocation is about having all the pieces there all the time.
Okay, so for the beginner, somebody who's less than, say, about a 30, 35 years of age, who's just started to invest and create a portfolio, what would be the ideal divide that you would say that at the beginning of 2023, this is the portion that you have to have exposure to equity, debt, and then gold and the other asset classes too? What would you say?
Okay, so I don't buy the thumb rules of age because I truly, my father is 70 and he's a more aggressive asset allocation than 40-year-old me.
Okay.
But I think for a 25, and there's a reason behind it. So I really believe age doesn't work. But I think for a 25-year-old investor, the one thing you do have is you have time on your side. So the equity bias, all things equal, should be higher. I mean, a portfolio can have 50, 60% equity, or even more if you can afford it. So I think that is the basic and the very important aspect of investing at that stage is one to start early and to save regularly, which is why for most salaried people, I truly think, I mean, I still do SIPs very, very loyally. I think just getting into that monthly habit of saving and investing is a very, very important one.
So, which style of investing will be the winner out there? Will the fund managers really opt for growth orientation, or will value investing find its leg in 2023?
Oh God, last year was a year where value sort of beat up a growth after growth had a great run, and everyone's been saying, should I move to value? And I really believe every strategy has its day, but the smart investor is one who who doesn't change strategies. You have to build a portfolio that's diversified, and diversified doesn't mean buying 20 mutual funds. It really means buying funds of different styles. So why is it value or growth? It can be value or and growth, and you can have a combination, but it's important to stick out styles, even in a bad period. I say the same thing about international funds. Just because they've had a bad year doesn't mean you ditch them.
Okay. So, in equity, say for example, are you excited about any particular categories, any sectors, themes that you think would actually turn out to be better this year?
I think we're excited about theme of the domestic economy and sort of domestic manufacturing, domestic capex, domestic economy.
Okay. And in debt, what kind of funds would you think that will work out better than perhaps say FDs, which are now getting more attractive with the rate hikes that we've been seeing?
I think here it's very simple. Target maturity funds with a 5 to 10 year horizon.
Okay. And in case I have to ask you, say for example, we've been talking about this first time investor, and those millennial investors who've just entered the markets. What are the key lessons that one should pick from 2022 as they enter this year, and be ahead of the times and perhaps take advantage of the situations that are getting created?
I'll give you two controversial ones. One is
Okay.
skip the FOMO. And I think there is so much FOMO out there. I mean, half the reason people pick cryptocurrencies, at least when they spoke to me, is my friend is doing it. That's a really
Yes.
bad reason to invest. So I think skip the FOMO, invest for yourself, not for your neighbor. And two, advice is serious business. I think the last 2 years have seen that anybody can make a YouTube video with a nice title or write a thread on Twitter and give you investment advice. And young investors fall for this. You don't take heart surgery advice from someone on YouTube. So money advice should also be taken seriously.
That's a very, very important point, because most of the millennial investors are actually getting into this fin influencing culture, and they are taking a lot of tips right there without those responsibilities. So, definitely a big, big advice for everybody out there. Please go and speak to financial advisors, registered financial advisors, for all that advice that you want to take for 2023. And one tip that, Radhika Gupta would really give, you've been talking to us about limitless, and, your potential that you've been speaking about, that everybody should unearth within themselves too, as they conquer life and professional life as well. So one tip from you for all our viewers for this year.
I missed the questions, actually.
I said that any tip from you for all our viewers for 2023 to be successful in this year, both in their personal and professional lives, because you've been writing so well about it, so much that we've talked about already, about your book as well. So, inspirations flowing in. So, on that account.
I'll give you a two-word tip, and it's inspired by this fabulous bus campaign that's going on, from Mumbai. It's written on Mumbai best buses. It says "Pudhe Chalo." And I think that means go forward. So I think in personal life and in investing, it's important to continue the journey and to keep going forward. And everyone has obstacles, but I think Pudhe Chalo is great advice for everyone.
You're absolutely well. On that note, thank you so much, Radhika, for being with us and sharing some wonderful insights with all our viewers. As always a pleasure having you with us on Business Today TV. And here's wishing you again a fabulous year ahead.
Thank you. Happy New Year.
Thank you. And with that, let's quickly jump back to the markets and see how they are trading at this point in time. 865 points up for the Sensex, 60,764. Good day so far. 1,803. Now 18,100 also crossed on the upside. 243 points. So the markets are inching higher back again. 1.3, 1.4% uptick for the markets at this point in time. But we'll keep you posted with how the markets really pan out in trade and whether this could be the right time for you to be entering the stock markets, the pockets that you should be focusing in. And just like how Radhika also pointed out that you stick to your goals and speak to your financial advisor, and of course looking at the kind of exposures that mutual funds and equities can actually give you over the long-term wealth creation is something that you should definitely keep on your mind as well. Thanks a lot for joining us onto this edition, but do stay tuned on to Business Today TV as always to get all the updates from the world of business and stock markets. Many thanks.